Hello guys, this is your guy Michael, the selfless strategic trader, and I am welcoming you into my YouTube channel. See, that sounds so professional. I just want to catch fun. I don't have time to sound professional. I'm not a YouTuber, I'm a trader. Alright guys, hello guys, this is the guy Michael, the selfless strategic trader. Alright guys, so I welcome you once again to my YouTube channel, and this is a wonderful moment, and I hope you guys are having a wonderful week, wonderful moment, wonderful trading. I hope your I hope price is not kissing stop loss. I want to believe your price is not kissing stop loss, right? But it should be kissing what? TP. Yeah. Alright, so guys, I hope trading is good over there, and I hope you are doing very well. And if this is your first time on this YouTube channel, you are welcome. You are welcome. You are welcome. You are welcome. Yeah, welcome to the family. So, in case you don't know what we do here we target and we focus on trading nothing less than 100 pips, catching nothing less than 100 pips profits, because our target is to what? Is to eat the bakery, is to carry the whole bakery and not to eat crumbs, And another thing is that on this platform we also help on how to grow a small trading account. So if you are struggling on how you can grow your small trading account, you are welcome to the solution center. And another thing is, for you to be able to grow small trading account, you need a good broker. So we also recommend for you some brokers that you can actually sign up with, that will help you with good spread and good leverage, and no nonsense fees. So I feel those things are not included. Yeah, so if you want to know more about that, just check the description, the video description. You are going to see the links to the brokers, the recommended brokers there. Alright, so guys, I want to show something that is very important right now. I want to be teaching us something that is very important. We'll be talking about these things on this channel for a while now, but actually I don't think I've really taken time to teach us, but this time I'm going to be teaching us because it is very important for you to know. It's not all about you just see a trade, you enter trade, you jump into trade. There are some things that you have to know. There are some things that you have to put in place. There are some things that you have to you have to you need knowledge. Yes, you need knowledge. You need knowledge about those things so that you can have a profitable trading moment. All right, so for those of us that attended the Zoom class, the normal weekend Zoom class to everybody, this is not for my premium members now, for the general members, for those of you that are on the Telegram and WhatsApp group, I showed us the analysis of this trade. Yes, we analyzed this trade together, and here I am. I told you that I'm going to be trading this particular pair, and I also told you I'm going to be trading any NZD pair, and I also told you I'm going to be trading any ZA pair. Yeah, that gives me setup, and I told us that I was focusing on those pairs because I saw what we call sentiment. Yeah, well, if you want to know more about sentiment, that means you have to you have to subscribe for my premium strategy to know more about sentiment. And apart from that, we analyze this trade together, and here we are. I'm going to be analyzing this trade for us because some of us couldn't attend the Zoom class, so I'm going to be using this particular. I'm going to be analyzing this trade for us. So the thing I want to teach us today, that is divergence. Somebody say divergence. All right, for the next Zoom class that is going to happen within the week before weekend, your comments will be very needed for you to be able to get the ticket. Don't forget there's a particular keyword we use in order for you to get your license. Do you understand? So, well, I will tell us the keyword as this particular video continues, because I don't want to waste time. All right, so we have two types of divergence in trading. We have many three types three or four types of divergence, but we have two major types of divergence. Yes, we have what we call regular divergence, and we have what we call hidden divergence. So you have to carry your paper and your pen, and you have to jot down, because you guys know I don't like people that are not active. I don't like people that are not serious. So you have to be a serious student as I'm teaching you. So we have what we call regular divergence, and we have what we call hidden divergence. Regular divergence is used when we want to target trend reversal. Yeah, regular divergence is spotted when there is trend reversal in the trend. Yeah, and hidden divergence is spotted when we how is it called, when we need to confirm trend continuation. Yeah, trend continuation. Regular divergence for trend reversal, hidden divergence for trend continuation. Regular divergence for trend reversal, hidden divergence for trend continuation. But the question should be, how are we going to spot all these things? How are we going to spot regular divergence, and how are we going to spot hidden divergence? And there is another divergence that I personally I gave a name to it, because I've not seen the name on any platform before, and that is interpair divergence. Interpair divergence. I've shown us an example of interpair divergence before, and I've shown us a trade where I used, like, not even one trade, some trades where I had to use interpair divergence in order to take decision here on what to do at a particular time on that trade. So I want to believe we are going to be able to remember. So that's by the way. So I'm going to be showing us how to spot regular divergence, because I don't want this video to be too long. So if I'm unable to show us how to spot hidden divergence here, that means on the part 2 of this video I'll be teaching us how to spot hidden divergence. But now I want to teach us how to spot regular divergence. So for us to be able to spot divergence, we need indicators. Yes, we need indicators. It is only interpair divergence that we don't need any indicator to spot that. But for regular divergence, we need indicator. Yeah. Meanwhile, when I want to teach about interpair divergence, I will tell us more about interpair divergence. So let me just focus on, I wanted to say something, but let me just focus on regular divergence for now. Alright, so on regular divergence we need indicators, and the indicators we need, I'm not loving this trade. I'm going to analyze this trade, and I'm going to use the divergence for us. So just stay tuned. So and if you are still following, please don't forget to like and subscribe and leave your comments. So as I was saying, God have mercy. So we need indicators, and there are 2 or 3 major indicators that people use to spot divergence. We have stochastic oscillator, we have relative strength index, which is RSI, and we have MACD. Those are the 3 major indicators that people use to spot divergence. So personally, I want to be using, for the sake of this tutorial, I'm going to be using which one should we use? I'm going to be using RSI. Yes, if there is time I will also use stochastic, but for now I'm going to be using RSI. So for us to use RSI now, you have to understand something, that you can just use divergence as a stand-alone confluence. No, before you can spot divergence, you should have analyzed your trade from higher time frame. For higher time frame, maybe daily time frame, weekly time frame, or monthly time frame. Then you can now come to lower time frame, like 1 hour, 15 minutes, 5 minutes, or whatsoever lower time frame you use, based on your strategy. Yeah, so whatsoever time frame you use, see, whatsoever strategy you use, you should be able to spot divergence. Yes, if you use a good strategy, your strategy should be able to spot divergence for you, unless you are using all those strategies that will be generating 5, 15, 20 pips for you. Anyway, as long as you are making profit, that's by the way. So you need, let's use RSI. So for you to use RSI, tap your screen like this, bam, and this thing will pop up. Then you click on this F. So we want to look for relative strength index. See relative strength index here, that is RSI. You click on RSI, then you click on done. All right, so as I was saying, you have to analyze your trade from higher time frame before you can talk about using RSI. Before you can talk about divergence. Before you can talk about divergence, you analyze from higher time frame first. So now I will show us the analysis of this trade, and after showing us the analysis of this trade, I will now show us where the divergence was spotted. So after showing us where the divergence was spotted, then I will now show us more example on how to target divergence. All right, as we continue, let me explain the concept of divergence for us. If we look at this trade here, if you look at this RSI, we have 70 and we have 30. So, and when trade is approaching 30, so the general belief is that it is on a downtrend, and when it's approaching 70, that means it is on an uptrend. So many people will even say when price gets to 70, just start to sell, and when it gets to 30, just start to buy. Well, sometimes it used to work for them. I'm not telling you that you should do that. So if you do that, you're on your own. So sometimes it used to work for them. All right, so divergence happens when price has already gotten to this 30. Some people will call it oversold. When it's on 30, that is, it's oversold, it should be getting ready to buy. And when it's on 70, it is overbought and it should ready to sell. So now I think I should use this one before I get to my normal trade. I should use this one as an example, shouldn't I? All right, so let me just continue. So when we spot for us to spot a clean divergence like this, we have to check the trend of the market, and we have to check what is happening on our indicator. We have to check what is happening on our indicator. So if price is going up on the main chart, we expect price to be going up on the indicator, and if price is coming down on the main chart, we have to expect price to come down on indicator. But anytime we now spot this thing, that when price supposed to be coming down on indicator, the price is still going up on the main chart, that means that there is preparation for what you call trend reversal. Is someone getting me? That means we are preparing for a trend reversal. Don't worry, I'm going to give us an example. I just want us to understand the concept of divergence. I want us to understand the concept of divergence. Now let's use this trade as an example. Let's use this place as an example. You see, price was coming from here, it's going up, and from here it's going up, right? Now there are something you have to understand also. When we have range, sometimes when price is going up here it may not come and go up, it might just be ranging. When price is coming down here it might not come down, it might be ranging. So I've once told us that once we see price ranging, that means something want to happen to the trend of the market. In the trend, is someone getting me right now? So now we want to try and spot that area price was ranging and where we are expecting reversal to happen. Don't forget this thing. The best way to spot reversal is that you should have analyzed your trade from higher time frame. I'm going to give us an example, so don't rush. Do you understand? I'm going to give us an example. Don't rush. Now look at what happened there. Let me use trend line. Look at what happened here. for you to understand this thing better, where is this one now? Sorry. Okay. Sorry, I just want to correct this thing first. All right, I was able to trap this. So if you look at what happened there, let's assume we've already analyzed on higher time frame and we are looking for reason to sell. So immediately we started looking for reason to sell. One of the things we will look for is divergence. So you want to assume we've already analyzed our market on higher time frame and we are looking for a sell opportunity. So we have to target divergence. So for a sell, if you are looking for a sell, the kind of divergence you want to look for, if you are looking for a sell on higher time frame, the kind of divergence to look for on a lower time frame is regular divergence. If you are looking for a sell opportunity, which is supposed to be a trend reversal, maybe you have been buying, then you want to close all your buys and enter a sell, not for trade continuation now, not like maybe you are buying, you are waiting for a pullback for you to continue buying. No, you have been buying but you are waiting to cash out, then to sell off. You want to enter sell. The kind of divergence you are meant to be looking for is a regular divergence, which is for reversal. So after you have spotted that opportunity to, I will show you live trade. I will show you an example. Do you understand? On the live trade. So just focus. So now once you get to your chart and you get to an area, your zone, when price trades to your zone, then you want to look for this kind of movement in the market. Now look at what happened here. Price was going from here up, from here it was going up. So your divergence arrow, your divergence line on your lower time frame should be the one going up, like it's making higher high. Are you getting me? So on this place, on your indicator should be doing the opposite of what the up is doing. Yes, so your indicator should be showing you something like a lower low or a lower high. What am I talking about? See, when you come like this, you click on your shape to draw your trend line. All right, look at what happened here. Can you see that? And you should be able, another thing is, you should be able to use this your crochet to note the line must be straight. So you click on this thing. All right, so you want to make sure the line is straight. You want to make sure the line is straight. Can you see that now? Look at this line here and this line here. You can see they are straight. Can you see? Because if you make mistake, you see, if you make mistake, you are going to spot the wrong divergence. So you want to make sure that your price is giving you what you wanted. Look at what happened there. So this thing was established, this one was established. So when this one was going up on your indicator, it was going down. That means price want to start selling. And I told us selling means it's coming from 17 to 30, so that it's going to be overbought. I mean, it's going to be oversold rather. Currently, once it's over 70, they regard it as overbought, so you want to sell it. Hope you are getting me. All right, so thank you for following me. And if you check here, now look at this place. I want to show us something here. Look at where it started there and where it started here. That means this one is just an excess, so I want to reduce it. Even though I've gotten what I needed, I want to do what? I want to reduce it so that everything will align. Can you see that? So this is how to draw divergence. So once this thing is spotted, then you know that price wants to what? Price wants to reverse, and it will now give you a clear confirmation when it creates another a level of liquidity there, and price came to clear that liquidity. You just enter on a retest, even though the retest did not happen in this case. It created another liquidity zone here, then it did what? Retested, and it just sold off. Hope you are getting me. Now the time of this video is getting too long. Let me just show us some example on the current trade, on this current trade. So the analysis on this trade is this. We said price gave us a liquidity zone here, this area, this zone trigger the aggressive movement that's cleared this liquidity, and I told us once liquidity is cleared, price will always come back to retest that zone that cleared the liquidity. And the same thing happened there. When price was coming back, it also created the liquidity zone here. Price came from here, cleared the liquidity zone in order to what? For two things here now. Came here to retest the previous zone that has not been tested before, and again to test the area that created the liquidity, the zone aggressive movement that cleared the liquidity area there. So which means price at this spot is giving us reason to buy, because one is on a retest, one is also going on a mission for a retest. So it gave us an opportunity to look for buy opportunity, a chance to look for buy opportunity in this market. Now if you go to 1 hour, if I want to enter, let's assume I want to enter with 1 hour, what am I going to do? I'm going to look for another zone that is cleared, and I'm going to look for a divergence so that it will be more clearer. Now look at what happened here. Price created a liquidity zone here. This candle here pulled and cleared the liquidity zone that was created, and when it was coming, it created another liquidity zone here. Now hope you can spot our divergence without drawing, without bringing my what is it called? I've already spotted my divergence here. Now for a divergence to buy, you know, for a sell, you're on the main chart, it goes up, and on here it comes down. So now on a buy, it comes down, and here it goes up to give us a higher high. Now let me show you what I'm talking about. Let me show you what I'm talking about here. All right, if I bring out my trend line here, from here to here, I want to make sure it's straight. Can you see it's straight? It's straight. So from here to here, and from here to here, what is that? That is divergence. So this is regular divergence for trend reversal. Regular divergence for trend reversal. And what happened? Just like the first example that I showed us, price came and cleared this liquidity and gave us a divergence. Then it went and retested. After retesting, it just shoot up, and it has been buying. Hope you understand this simple concept. Yeah, so this is divergence for you, and it is as simple as that. There's no headache, no special thing. You don't draw divergence from, if you are looking for a buy, you don't draw divergence from here. No, it is wrong. You don't draw. I used to see some people that draws divergence like that. You don't draw divergence like that. There is a way they use divergence in that format. Not for you, not this kind of thing. They use it to those people that used to trade and what is it called, trend line. They can tell you that this is a zone here. They can tell you this is a zone here, and they can tell you price closed above it and on a retest, that kind of thing. So that's the concept of some people, but that's a very bad concept if you don't know how to use it, and it's not even advisable. This is the real divergence here. Once your divergence is spotted there, then you can look for your your trend reversal here, and when liquidity is going to be taken, then you can enter your trade. It is as simple as that. It is as simple as that. Let me show us 3 or 4 more examples before we go. And don't forget to like and subscribe, please. Like and subscribe and leave your comments. This is Euro USD 1 hour time frame, and if you looking at it alone, you should be able to spot the divergence, because this one is going up and this one is coming down. Let me use the trend line to draw it for us so that it will be more clearer. This one is going up like this. Come out. Okay, this one is going up, and if we use our crochet, we are going to see that it's a straight line. We want to make sure it's straight. The 2 lines are straight, and this one was coming down. Let's confirm it. Okay, can we see that? So this is divergence here. Price was coming from an oversold area, overbought area, and we are looking for an opportunity to buy. It came all the way to clear liquidity levels here. With this candle, it came back to retest the very spot which created the divergence, created another liquidity level here, cleared it with this small candle beside it, and after that it sold off. Can we see it? Hope you are seeing that. That is for a sell. Now the same thing happened on this buy here. You should be able to open your eyes so that you will spot your trend reversal when you want to enter your trade. Yes, it is as simple as that. As simple as that. You can see. Let's use our crochet to spot that. So we can draw this one from here to here, but I love it when it's not obstructed, because if you want to draw from here to here, this candle here is going to obstruct the movement, and I don't like to draw my own divergence like that. But if we look at this place, we see just a small divergence in our zone. So you should have what is it called, analyze your trade from higher time frame, so that you will know that divergence is already set in this area. So if we look at this place now, just as simple as that, and you can see it's a what? It's a buy. You can see it's a buy. I hope you are getting what I'm teaching us. I hope we are getting what I'm teaching us. Now let us check EJ. Let us check EJ. Look at EJ. The same thing happens here. Look at it here. Divergence came and cleared liquidity, and it's what came back to retest after clearing liquidity levels there, and it sold off. Hope we are getting what I'm teaching us. It sold off, and before it bought here, before it started buying here, it still gave us another opportunity. If you check here, let's use our crochet to confirm if they are straight line. You see, from here to this place, and here and this place. So when price was coming down, indicator was going up. That is a regular divergence. If we draw it like this, this is what we are going to get. The video is getting long, so I don't want us to spend too much time. So this is what we are going to get, and it's that's a divergence. Hope we got this clearly, right? Look at it. So that's a divergence there, and even from here to this place, still showed another divergence. This one was going up, this place was going up, this place came down, another divergence came, cleared liquidity level, came back and retest, and phew, it's a good trade and it bought. Hope you are getting me. I want to believe we are seeing what I'm showing us here. So before you can start to look for divergence, you should have you should have checked your trade. You should have analyzed your trade from higher time frame. You should have analyzed your trade from higher time frame. Now this is GJ. This is GJ. I don't know if I've shown us GJ before. The formation of GJ. Yeah, I think I've shown us GJ before. Yeah, I've shown us GJ before. This is GJ. Look at this place. Look at this place. That's divergence. If we use our trend line, draw this one up and come again, draw this one down. That is divergence. You can see by the time you start to practice this thing, you will understand better. And price came at what, and this did some liquidity clearance, and it came back and retest, and it sold off. You can see how powerful divergence is. Because of divergence, you can see how many pips you are able to catch on all these trades. Can you see? And the same thing will happen on a buy. We have to know how to spot it. We have to learn how to spot it. One of the easiest way to spot it is to bring out this thing and just measure. You want to look for that particular area. You see, like now, this one is very tight one, very tight one, very tight one. It's a very tight one. It's a very tight one here, this place and this place. I don't want to waste our time, so I don't want to start. So let me just use this thing to see. Look at the straight line here. That means we are drawing this one like this, and we are drawing this one like this to give us the divergence. So that is just it on what is it called, on divergence. If we check NZDCHF, I think NZDCHF also gave us something like that. I want to be sure. Let me check it out. I'm already on a sell trade on NZDCHF. Yeah, see, it's not even too far. It's not too far at all. Look at it from here. It went up, and from here it came down. Divergence. Look at double bottom here. I mean liquidity level here. Price cleared the liquidity, traded back, which means I entered late, and pew, we are on a sell. So that is it. So you have to see, I've been making emphasis on you learning how to analyze from higher time frame. If you want to be able to spot a good divergence, you have to learn how to analyze from higher time frame. If you don't know how to analyze from higher time frame, you'll not be able to spot good divergence. You'll not be able to spot original or a legit divergence. You can see this thing is straight from here to here, straight, and from here to here is going to be a what? It's going to be a divergence. Yeah. So this is how divergence works, and this is regular divergence. Personally, I use regular divergence more than every other divergence because I love to trade trend reversal. Yes, I love to trade trend reversal. So that is it on regular divergence. Our next lesson on divergence is going to be what is called, it's going to be on hidden divergence. All right, guys, so if you have learned something, and if you want me to create video on hidden divergence, so just leave your comments and just comment how to trade divergence. So once you comment how to trade divergence, that could be your own ticket for the midweek trade analysis. All right, guys, this is your guy Michael, the selfless strategic trader. Catch ya, guys. Bye bye. Don't forget to like my video and subscribe and comment.